All right, here we go with section 2 and your focus question. In late 2007, the economy entered a recession. In 2008, the U.S. financial system was on the verge of total collapse. The roots of the 2008 crisis lay in a combination of public and private policies that favored economic speculation, wild spending, and get rich quick schemes over more traditional paths to economic growth and advancement. For years, the Federal Reserve had kept interest rates at very low levels to help the economy recover and to enable Americans to borrow money to buy homes. The result was a new bubble as housing prices rose rapidly. Consumer debt rose dramatically as people who owned houses took out second mortgages or spent to the limits on their credit cards. In mid 2008, the average American family owed an enormous amount of debt. All this borrowing fueled increased spending as Americans spent more, saved less, and saw more jobs shipped overseas, even while household income stagnated. China helped finance America's spending spree by buying billions of dollars of federal bonds, effectively loaning money to the United States so it could purchase Chinese-made goods. Banks and other lenders issued more and more subprime mortgages, risky loans to people who lacked the income to meet monthly payments. The initially low interest rates on these loans rose dramatically within a year or two, and banks assumed home prices would continue to rise. Wall Street bankers created complex new ways of repackaging and selling these mortgages to investors. Insurance companies, including the world's largest, American International Group, insured these new financial products against future default. Leaving the market to regulate itself, the Federal Reserve Bank and other regulatory agencies did nothing to slow the speculative frenzy as banks and investment firms reported billions of dollars in profits and rewarded executives with unprecedented bonuses. By 2006 and 2007, excess housing construction caused home prices to begin to fall. As increasing numbers of homeowners defaulted or were unable to pay on their monthly mortgage payments, in 2008, the situation reached a crisis stage as banks stopped making loans, business dried up, and the stock market collapsed. The Dow Jones Industrial Average, once above 14,000, dropped to around 8,000, the worst percentage decline since 1931. Lehman Brothers, a venerable investment house, recorded a $2.3 billion loss and disappeared, the largest bankruptcy in U.S. history. Leading banks seemed about to fail. With their home value and stocks falling, Americans reduced spending, which led to business failures and a rapid rise in unemployment. The gross domestic product of the United States contracted dramatically by 6%. Most damage was Americans' confidence as they lost their homes or jobs and watched their retirement savings and pensions, if invested in the stock market, disappear. In April 2009, the recession that started in 2007 became the longest since the Great Depression. In the Great Recession, the mortgage crisis affected minorities the most since many had been steered by banks into subprime mortgages, even when they had the assets and income to qualify for traditional loans. As a result, foreclosures were highest in minority areas. In 2012, Wells Fargo Bank, the nation's largest home mortgage lender, agreed to pay $175 million to settle claims that its brokers charged higher fees to blacks and Hispanics who borrowed money than it did to whites with comparable incomes, and that it pushed them into risky subprime mortgages. Like other scandals in the past, the Bush-era scandals damaged confidence in the ethics of corporate leaders and seemed to repeat the get-rich-quick ethos, connection between business and government, passion for deregulation, and corruption that had contributed to earlier economic crises. Public anger at bankers and stockbrokers skyrocketed as Wall Street firms fired thousands of employees but paid out $20 billion in bonuses to top executives. Between 2009 and 2015, major banks were forced to pay fines totaling over $100 billion for criminal actions. Yet banks' profits are so large that the institutions accepted these fines as a minor cost of doing business. No individual executive was charged with the crime, and the Securities and Exchange Commission granted waivers from penalties. It was also revealed that Bernard Madoff, a Wall Street investor, had run a massive Ponzi scheme in which he sent fictitious statements to his clients and never actually made stock purchases for them. His investors lost $50 billion. Madoff pleaded guilty to fraud in 2009 and was sentenced to 150 years in prison. Madoff's case mirrored the American economy. For years, its growth was based on borrowing from others and spending money people did not have. The crisis showed the dark side of market fundamentalism, the ethos of deregulation that dominated world affairs in recent decades. Alan Greenspan, chair of the Federal Reserve Bank from 1987 to 2006, had steered the U.S. economy through multiple crises and presided over much deregulation, artificially low interest rates, and excessive borrowing and spending. He and his successors had promoted the housing bubble and allowed speculation to flourish without government intervention, effectively allowing securities firms to regulate themselves. In 2008, Greenspan conceded to Congress that there had been a flaw in his belief that free markets automatically produce the best result for all, and that regulation would damage the banks, Wall Street, and the mortgage market, and he said he was shocked by the crisis. His testimony seemed to mark the end of an era in which every president from Reagan onward had told the world to adopt the U.S. model of unregulated economic competition. Now, the U.S. model lay in ruins, and a new role for government in regulating the economy seemed inevitable. In the fall 2008, the Bush administration seemed unable to address the crisis, sticking to free market principles that allowed Lehman Brothers to fail, but this sent the stock prices of other banks and investment houses into a free fall. The administration quickly reversed course. It persuaded Congress to appropriate $700 billion to bail out failing firms. Through the federal bailout, taxpayers in effect took temporary ownership of these companies, absorbing their massive losses. Despite this bailout, the banking system's health was still fragile. The crisis also exposed the paucity of the U.S. safety net compared with other industrialized nations. In Western Europe, laid-off workers received many months of unemployment insurance. In the United States, only a third of the jobless even qualified for unemployment insurance, which ran out for most in a few months. The abolition of welfare during the Clinton administration left only a patchwork of national aid programs, like food stamps for the newly poor, and state funds for poor relief were quickly exhausted as tax revenues disappeared. In 2012, only 1 in 5 poor children received cash aid, the lowest percentage in half a century. A little-known 47-year-old senator from Illinois when the campaign of 2008 began, Barack Obama owed his success both to his own exceptional skills as a speaker and campaigner and to the evolution of American politics and society during his lifetime. Without the civil rights movement, his election would have been inconceivable. He was the product of an interracial marriage which ended in divorce when he was 2 years old between a Kenyan immigrant and a white American woman. When Obama was born in 1961, their marriage was still illegal in many states. He attended Harvard Law School and worked in Chicago as a community organizer before going into politics. Obama was elected to the U.S. Senate in 2004 and first gained national attention with an eloquent speech at the Democratic National Convention that year. His early opposition to the Iraq War won the support of the Democratic Party's large anti-war element, his race galvanized the support of black voters, and his promise of change appealed to the young. Obama faced the Republican nominee, Senator John McCain of Arizona, in the general election. At age 72, McCain was the oldest man ever to run for president at the time, and he surprised everyone by choosing as his running mate Sarah Palin, the little-known governor of Alaska. Palin quickly attacked Democrats for being unpatriotic, lacking traditional values, and not representing the real America. While this was very popular with the Republican base, her performance made it clear that she lacked knowledge of the many domestic and foreign issues that a new administration would confront, and many Americans questioned McCain's judgment. But McCain faced President Bush's sinking popularity in the financial crisis, which reached new depths in September and October. Obama's promise of change carried the day, and he won 53% of the popular vote and a large majority in the Electoral College. The election redrew the nation's political map. Obama carried both Democratic strongholds in New England, the Mid-Atlantic, and the industrial Midwest and the West Coast, but also Republican states such as Virginia, North Carolina, Florida, and Indiana. Obama assembled a diverse coalition, winning almost the entire black vote, many Hispanic voters, and many young voters. He was elected with only 43% of the nation's white vote. Few presidents have faced a set of challenges as serious as those Obama faced on taking office. The economy was in crisis and the country was involved in 2 wars. But many Americans saw Obama's election as a cause for optimism. On January 20th, 2009, Obama was inaugurated as president with more than 1 million people traveling to Washington, D.C. to view the historic event. In his inaugural address, Obama rebuked 8 years of Bush's policies and the assumptions that had shaped government since Reagan's election. He promised a foreign policy based on diplomacy, pledged to protect the environment, spoke of the need to fight income inequality and ensure access to health care, and blamed a culture of greed and irresponsibility for contributing to the economic crisis. He also promised to respect the Constitution. Unlike Bush, Obama said little of freedom in his speech, stressing instead community and responsibility. His speech harked back to the Revolutionary era ideal of putting the common good before individual self-interest. So, that's the end of the second section. We'll be back for the third.